Welcome back, and let's take a check at the crude oil prices. Remember, they have been very volatile and some strength coming back into that one with nearly 0.6% of a gain as OPEC and non-OPEC members say that they are ready to cooperate and even look at cutting outputs. Apart from that, remember, Nigeria and Venezuela have already called for production cuts. You also have 3 shale gas companies in US who are talking about spending cuts, and that's the support coming in because of that. The gold prices in the meanwhile have slipped as investors react to the Fed taking note of global risks. Remember, we did see a 12-week highs yesterday at $1126 per ounce, but from those levels, it's 0.5% decline on your screens. Let's get on board Naveen Mathur, who's Associate Director, Commodities and Currencies, and he joins us live on the show. Naveen, hi. What's your sense really coming in for the crude oil prices? Because while we seem to be inching up on a daily basis for last 3 or 4 sessions, do you see 33 sustaining?
Good evening, Manisha. I think the markets are on the bullish note for the last 2 or 3 days, largely because of the reasons you rightly mentioned about the spending cuts by a few of the companies, the shale companies in the US, and also the cooperation by the OPEC and the non-OPEC members for some kind of an understanding to cut the production level. So with that going in, we see the sentiments going positive, and hence the markets have turned up from $26, $27 levels last week to around 33, 34 levels today. Overall, still, I think with a lag effect, the markets may bounce up to a levels of around $35, $40 levels. But I think as of now, 35 would be one of the crucial points where the market should consolidate at in the near term. Overall, the currency weakness also is putting some kind of trend on the upside, the upside strength to the crude oil prices because of the FOMC meeting yesterday and the outcome of the gradual interest rates hike and a gloomy global economy picture. So I think with the weakness in the dollar index, there is a strength on the dollar-denominated commodity prices, and hence we are seeing an upside in all the commodities largely in the last 1 or 2 days. But crude, definitely, I think 35 would be something where the markets are heading at, and it may consolidate in a level of around 35, 40. With a lag effect of 6 months down the line, it may move up to $40, $45 levels, but I think around $35 would be where the markets should stabilize now.
Naveen, also, what's your sense now coming in for the gold and silver prices? Because that clearly has been an area which has seen a lot of green, more than 5% up for gold. Do you see 1100 hold? Are you bullish from these levels?
Manisha, nothing much on the fundamentals have changed of late. It's just that I think the dollar weakness because of the FOMC expectation of the gradual interest rate high, and as I said, the gloomy picture on the global economy, plus some kind of stress levels in the Middle East are building up pressures for the prices to move up. The geopolitical tensions, the safe haven demand, plus the currency factor is making the gold price inch higher. But I think the fundamentals still remains not that bullish what we have seen few years back. The safe haven demand is there, which we have not seen last year, even in spite of the Ukraine factor or the Middle East tensions or even the Greece crisis. They have come back onto the gold markets. The safe haven demand has really picked up off late. So I think the prices which are hovering at around $11, $18 levels and Indian markets around 26, 27,000 levels, I think the markets may consolidate around 1100 levels for the international space. And in Indian markets, we think 27,000 where the markets 26 to 27,000 where the market should consolidate at. If you remember the last show when we had earlier for the end of the year, I mentioned about 24,500 was the lowest level. The prices of the gold did touch 24,800 and then bounced back. The rupee depreciation also played a role in this period, which helped the prices in the domestic markets to move upside. But I think going forward around 26, 27,000 where the prices should consolidate in India, and around $1,100 levels would be for the international markets.
Naveen, would you say for the same for the silver prices? Because while we've seen a lot of volatile moves coming in for that, it really hasn't been able to match up the kind of gains and participation and investment that gold seems to be seeing.
Absolutely, Manisha. Silver is 50% precious metal, 50% industrial metal. So you need to remember about the industrial metal pack, the base metals pack and all. China factor played a very, very crucial role over a period of time. In the last few months, we have seen new lows touched by almost all the base metals. In the last year, I think was one of the worst years for the base metal pack. China consumes around 40 to 50% of the total demand of the base metals, and because silver also to an extent contributes to this particular segment. It is not taking the inch forward like the gold. Although precious metal strength has given a flip to the silver prices too, they are trading at around $14.5 levels, and in Indian markets we are seeing prices around 35,200 levels. I think the markets are looking forward to a little bit on the higher side. Even if for the intraday somebody is looking to trade in, we would recommend to buy the silver contract of March at around 35. Buy on the dips. It's trading at around 35,200 levels with a stop loss of around 34,600 and targets on the upside at around 35,700. Very, very dynamic commodity, Manisha, as I always keep saying. It's taking not too much strength from the gold. At the same time, it is also taking some kind of beating because of the base metal pack. So I think it's a mix of both the segments, and therefore not too much bullish on the silver going forward.
Now, when you talked about the base metals right now, and yes, they have been in a very volatile territory. While yesterday was strong, we saw nearly 3 to 5% of gains in most of them. But the fundamentals clearly have not turned around. There is an oversupply. The economic data hasn't been supportive. So what's your pick there?
I think, Manisha, yes, the 2 or 3 points which you said are rightly saying about the base metal pack, the kind of the pressure which we have seen building up. As I said, China is a crucial factor up unless we don't see positive economy growth. Although the markets means the Chinese economy is growing around 7% for the GDP growth, but still a lot much depends upon on the China factor for the base metal pack. Plus, how the economy grows even in the advanced economies like the US or the Euro zone would be a critical factor to watch out for on the base metal pack. I think the dollar weakness again has given some kind of a strength to the dollar denominated commodities, and base metal are also one of the gainers because of the weakness in the dollar index. So I think yes, there is still a scope of kind of consolidating or a bearish trend to continue because of the China factor. But still, with the currency factor, the interest would be for the intraday to buy onto the copper contract for the February at around 307, 308 levels, stop loss at around 304, and targets in a range of around 313 to 314 levels.
All right, Naveen, we'll let you go at that. Thank you so much for joining us. Before we leave, actually, we should take the rupee on screen because that has declined quite a bit in trade. As Naveen was also pointing out, it really is the decline in the currency that has cushioned some decline coming in for the commodity space as well. Remember, it has been quite a fall today, 0.25% down, 68.23. So that's a new low perhaps that we are looking in for the currency. On a closing basis, that's the lowest in 29 months of a closing coming in for the rupee on your screens. But with that, completely out of time on the show. Thank you for watching.